60 minutes, and then we are going to be out. Only 60 minutes, okay? So, like, nobody stress out. All right. And we have the amazing Ollen Douglass from Motley Fool Ventures here, who will be educating us about what is investing. But before we get started, we have to thank our sponsor, Trust&Will. They are helping me make this free for us all. So a special thank you to them and Natalie Mead and Ollen Douglass. Right now, I'm going to send it right on back to Natalie to introduce us both. Let's go.
Awesome. Good afternoon again, everyone. So I want to introduce our wonderful hosts as well as our speaker for the hour. Ruby Sunshine Taylor, MSW, is the CEO and founder of Financial Joy School, a virtual educational platform that provides access to financial education and investment tools to Black and Brown youth and their families. Ruby is a double HBCU alumna, Howard University and Virginia Union University, and is an advocate for closing the racial wealth gap to make our world more financially equitable. She harnesses the power of financial knowledge to bring connections, application, and education to establish generational wealth for Black families. A traumatic brain injury survivor, Ruby is a disabled Black queer woman, wife, mother, daughter, aunt, sister, and friend who is driven to make our world more equal, joyful, and just. She is a motivational speaker and consultant for financial brands, including Wells Fargo, and has been featured in several leading publications, including The Motley Fool, Inc.com, Fast Company, Mashable.com, and more. Originally from Bronx, New York, Ruby currently resides in Baltimore, Maryland with her wife, Dr. Sheila Graham, 2 children, and their lovable dog. And then for our speaker of the hour, our special guest, we have Ollen, and prior to joining the fund, Ollen was CFO of the Motley Fool Holdings, Inc. for 14 years. And during that time, he was responsible for the overall financial health of the Fool and helped guide the company through periods of major growth, contraction, and market volatility. Ollen's oversight duties included the Fool's finance and accounting groups, as well as legal, benefits, sales, business development, real estate, business intelligence, international, and asset management. His financing experience spans the full spectrum from bank financing to venture financing. During Ollen's management of the pilot program, Motley Venture Partners, he and the team compiled a portfolio of private companies that will be contributed to the fund. Today, Ollen serves on the board of Iris, In Her Sight, and Young Artist of America. He has been a recipient of the Motley Fool Founders Award and Favorite Fool Award. He was twice nominated for Greater Washington CFO of the Year and is a member of the 2019 class of Greater Washington Minority Business Leaders. Prior to joining the Fool, Ollen worked in mortgage banking, focusing on mortgage servicing, fair lending, and risk management. He was also an auditor for KPMG and is a CPA. Ollen graduated from the University of Baltimore with a bachelor's degree in accounting and lives in the Washington area with his wife and 3 sons. I am so looking forward to the topic for today, and I'm going to highlight Ruby and Ollen as they get started for this afternoon.
Welcome, Ollen. Welcome. Ollen, thank you so much. You know, I have made you my unofficial uncle because you are that dope. That amazing. And so,
Thank you
Olin,
very much for that movie.
let's just get into it. Sir, can you please tell us a little bit about you, about your family, upbringing, where where are you from? And before you start, let me just say this. I am a stutterer. You will hear me stumble across this seminar, and it's okay. Everybody breathe. Eventually, I will say the right word. Plus, it's so let's hear from Olin. Now that you know that I am a stutterer and proud, I'm gonna pop my collar. Poof. So let's go, Olin. Tell us about yourself.
Well, thank you for that great introduction, Natalie. And Ruby, you have so much energy that I think people are going to pay attention to you no matter what you do. So I don't think you have to worry about that. So a little bit of background, I'll add in some pieces that were already there. And I'm a lot of Baltimore and running through my blood. I was born in Cherry Hill. Um, Grew up in Baltimore County. There we said we graduated from the University of Baltimore, but I've been in the Baltimore public school system from beginning to end. Ruby, um, go ahead.
Which is amazing because we hear so many negative things about Baltimore City, particularly Baltimore City public schools. And you are one of the shining sons of Baltimore City public schools. And we want people to know that just because you are Black and you live in a city, you are still amazing, such as Olin, because he did not allow labels to stop his greatness. So you was born in Baltimore, you are like the third or fourth generation Baltimorean, correct?
That is correct. My parents were raised here. My dad was born in Baltimore. His mom was born in Baltimore. So I think my great grandmother, I know she grew up in Baltimore. She may have been born on the Eastern Shore, but have lots and lots of family in the area. So Baltimore is always my home, no matter where I go.
Awesomeness. Can you tell us what college you, what is it, attended?
Yeah, so as you said, I went to the University of Baltimore, right down in the city, next near the train station. So, driving down there every day. I would actually finish my college going to school full time at night and working full time in the day in Annapolis. So, you know, doing what it needed to do to get that education. So.
Cool. So once you graduated, right? How did you start your career as an accountant? How did all of that begin for you?
No, it was my first job was working for one of the largest accounting firms in the world, University of Baltimore. Again, so school doesn't have a big name, but they had the right connections. They had career days, and I got a interview with a company called KPMG. Like I said, one of the biggest accounting firms in the world. They hired me, and I started there. And that was really the start of that finance career. I was there for a few years. I went into banking, where I worked there for a while, and eventually found my way to the Motley Fool.
Awesomeness, awesomeness. Now that you said that, right? The
Yeah.
Motley Fool. Can you tell us what that is? What is
Sure.
the Motley Fool?
Yeah. So the Motley Fool is, I think, in the simplest terms, it's a company that helps give people guidance on investing. And so there is the Motley Fool Holdings, which is a really big company that has a broad range of things. And most people, and we'll talk a little bit today about the Motley Fool, what we call the publishing business, where they're providing, like I said, information and guidance to help people who want to invest learn a way to invest that is accessible to a lot of people, and teaching them the way to do that to deliver long-term success.
So can you explain the Motley Fool membership? What does that entail? And like, how can we as Black people benefit from that?
Mhm. Yeah, I think if you want to learn more about the Motley Fool, the easiest thing to do is you go to www.fool.com. And right there on the page, we have lots of, the Motley Fool has lots of free content. I want to make it clear for people, like I work for Motley Fool Ventures, which is a sister company to the Motley Fool. And I'm here as myself today. So we're talking about it. So I just want to make it clear. But you go to fool.com and they have lots of free content for you to look at and begin to just understand the language of investing, really make sure you get grounded in the fundamentals. And then as you get to that point where you really want to start actually doing investing and you're needing help trying to decide what companies to invest in, the Motley Fool has some newsletters that you could buy that will help you navigate you through some of those decisions.
I love what you said, buy. Yes, you can purchase memberships through the Motley Fool.
Right.
And before we get into more of this and learn about what is investing, we are going to give away one free membership to the Motley Fool. It's called the something advisor. What is it, Ollen?
So it's the Motley Fool Stock Advisor.
Stock advisor. Thank you. I have a brain injury too.
That's right. And when you get Stock Advisor, one of the things I will say, after you get access to a whole community of investors who are there to help you along the journey. Lots of friendships, lifelong friendships have been made there, as well as lots of great investment advice.
Yes. So let's give that away. Natalie, take it away. Let's see who is going to win this $199 Motley Fool membership. Let's go.
All right. Are you all ready? Let's spin the wheel. And hopefully these people are here.
Whether they are here or not, we will let them know that they are our winner. Amy is a winner. She had won a membership to the Motley Fool. So thank you so much.
Hey, Ruby, let's spin that thing. Let's spin that again. It was so close. We're going to give him another try. We're going to do 2.
Oh, okay. Let me go ahead.
I'm going to take care of that. Yeah, right.
All right. We're going to do another one. We got Amy for the first one.
Okay, now let me just take her out so she doesn't want to get. All right, there we go. Maya.
The winner is Maya, which is
awesome.
My 17-year-old niece. She will be ready.
Excellent.
A great age to start all of this, right?
Oh my God. Yes, because the earlier you start, the better.
Yes.
Right?
Yes.
The earlier, the better. So I just did an analysis as I am knocking my phone over. I just did an analysis yesterday to see how much somebody would have to invest to get to $150,000 within 25 years. And if you invest in the S&P 500, all you would have to invest is $59.87 over 25 years to be able to have $150,000. We all can do that. And if Maya does that at 17, let's just do the math, right? 17, 25, 35, 42. At the age of 42, she would have $150,000 just by investing $59.87 a month. But what does all of that mean? Let's find out. Ollen, we're going to hit the investing part, right?
Yes, let's hit it.
When did you become an investor?
Well, I'll tell you. I'll tell it in the form of a story of buying my first stock. I was probably in my mid-20s, had some interest in stock, didn't know much. And a friend of mine, or a guy I went to high school with, had graduated from college and got a job as a stockbroker. And he came to my house because that back in the day, that's how things worked. There wasn't really a lot going on the digital side. And he said, I got this new job and I'm out here and I know you like stocks and I have this little stock of a shoe company that I think you should buy. And I'm like, I don't know, this guy's new. What does he know? And I said, well, what's the name of the company? He was like, Nike. And I was like, I don't know. Michael Jordan, he's great, but everybody knows about their company. I need something different. I need something special. And so I didn't buy the Nike and I bought Jiffy Lube because they were, from Baltimore. They were up and running. They were talking about them. I was like, I know what I'm doing. Fast forward, long story short, if I had invested in Nike, it was $50. That $50 would have been $5,000 right now. In Jiffy Lube, I lost all my money because it went bankrupt and disappeared. And that was a lesson for me on kind of, it's not so much that you lose money, but when you do it alone, it's really hard, right? You have to learn all the lessons yourself. There are things that, in retrospect, I probably couldn't have known myself, but people could have told me about, while Nike might have been a better idea than Jiffy Lube. But when you go on your own, you sign up to learn mistakes that other people have already learned and told you about. And in fact, probably the worst part of that story is not the money that I lost, but I didn't invest again for like another 10 years after that experience because I kind of had very little confidence going in. And you have your first one's a loss and that even deteriorated. And so I just kind of sat on the sidelines thinking about it, going to do it one day. And what changed was along the journey, finding the Motley Fool and starting to read that content. And these guys are telling me, hey, you can do this. And hey, there's a way to do it. We can teach you. You can't just look at one number and decide whether a company is good or not, And then I had a boss and I was telling him about how I wanted to invest, but I couldn't make my mind. And my first one, I lost money. And just like you just said to your niece, he said the same thing to me. He said, the most important thing you can do is just get started. He said, don't trust me. Don't worry about it. That what happens with that first stock for your financial well-being is not going to be what makes the difference. The difference is going to be made by what you learn. And so I kind of stopped, sitting on the fence, and I bought some Home Depot and a couple other stocks, and some of them worked, some of them didn't, but the ones that worked really worked, and I kind of got hooked. And I've been investing, nonstop, since then.
So my next question is, can I borrow $20? Right? You said that you have had a lot of winners. I did hear that key word, but here we go. What about your family? Did they invest?
Growing up, my family did not invest. I did not know anyone who invested, and most of the time when talk to people about stock market, they would say, that's just gambling. And, I got to stay away from that. They hear the market crashes on the news, and that just kind of reaffirms the risk element of investing, which is true. But what was less common then is how you hear how quickly stocks just keep growing. And now if you look back at that stock market crash in 2001 on a chart, it just looks like a tiny little blip. All that noise and all that panic, over time, it just disappears. And, as you talk about lessons, I think two things that I would encourage everyone is, one, to get started. And the second one is just have a long-term horizon. And this is something that the Motley Fool preaches that will help you with. Our CEO, I'm not as long-term as he is, but he invests in, he's like, I need 5 years before I know whether this is a good investment or not. And for me, I'm probably not that, but I do measure in years as opposed to Wall Street, which measures in days or weeks and quarters. For them, 3 quarters is forever. And me, I'm just getting started. I'm just learning at that. I'm still learning at that point.
Yes. Can you explain what is investing?
Sure.
What the heck is it? A lot of people say the word, right? Especially now, it has become the it, which makes me fearful because a lot of people are like joining, but not fully understanding what investing is. So, like, can you break that down for us?
Sure, sure. So I'm gonna make it basic, and apologies if everyone kind of knows this already. But at its core, when you invest, and we're talking about in public companies now, when you invest, you're actually buying a share of the company. So when you invest and you buy a target as a stock, that stock actually represents a piece of ownership of the company. Now, so you are a part owner. I'm a part owner of Target. I'm a part owner of Apple. Now, it's important to realize that you're a really, really small part. So don't kind of walk in the Apple store acting like you own the place, because you and like a couple tens of millions of people also own a piece of Apple, and you're not like the owner. Right? So make sure you relax a little bit when you go into the store. But when you do go in there and you buy something, you are paying yourself, and you have that relationship. And that goes back to this idea of being a long-term investor. When you're investing in something that's going to pay you, you have to give it time, right? For me, investing means, putting your money into a company that you believe is going to do well in the long run. If you're buying today and selling tomorrow, or you're looking to get in and out in something measured in days or weeks, maybe you're day trading, maybe you're, some other type of investor, or just a trader, and to each his own, not my bag, but I don't consider that investing. That's trading. That's getting closer to gambling, because the world just changes too fast. But over time, things tend to work out. Mm-hmm.
Can you please explain the difference from short-term investing and long-term investing?
Yeah. So again, when you talk about short-term investing, you buy a stock and you're hoping that something happens in the next minutes, some people, hours, days, weeks. You're really trying to take advantage of some movement in the stock because of something that you expect is going to happen in a short run. And that's really guessing. When you're an investor, you're looking, you're not asking what Target, for example, is going to do in the next hour. Like if I ask all of you that, Target, what's going to happen to Target next hour? You're like, I don't know. I don't know. But if I say to you, do you think Target's going to be around a year from now? You're like, absolutely. There's no way that thing is going anywhere, right? And so that starts to be the basis for investing, where you're starting to think about what's going to be the long-term picture for this stock. A perfect example, maybe is last year, I guess it was almost 2 years ago in 2020, I guess, when the pandemic hit, and stocks dropped. They dropped a lot, and they dropped fast. And if you were a short-term trader, there was a good chance that you lost a lot of money because stocks went down. You probably weren't able to hold them. If you were someone who on January, you invested in 2019, you invested a bunch, and then you come back December 2019, it would be like nothing happened. You're like, what's the big, other than everybody's wearing a mask now, and you got to explain that stuff. But from a stock market standpoint, it took that big lumps, and then it just moved forward. All you had to do was be patient. Sometimes the best thing to do in investing is do nothing. And it's surprising how hard it is for people to just do nothing sometimes.
Thank you, Ollen, because I am pushing long-term and investing for Black families to help us build generational wealth. Mm-hmm. I am not for trading. I have nothing against it, but that's not what I am for, right? I think that once you begin to do that short-term trading, it becomes gambling. And once you become a gambler, it becomes addictive. That's what makes it problematic, right? You won't be able to just stop. You're going to keep on trying to get a bigger win which will have you have a bigger loss. So that's why short-term investing is not the move unless you have studied it for years and have a supercomputer. So like you need to study it. You need to have the equipment to really be able to benefit from that. And there is a tax loss with that. The government is going to come and like get you at a much higher rate than if you were a long-term investor. So that's why the benefits of investing long-term outweighs short-term investing historically. And so can you tell us what a stock and a share is? Because many people talk about stocks, many people talk about shares, but what the heavens is it? Today is my Sabbath, so I won't curse today. I'll curse tomorrow. But what the heavens is a stock? What is a share?
Right. And it is, as I said before, the way that all the companies that you can invest in, they are called public companies. They go through a process where you think about what the company is worth, and they basically take a piece of that and say, I'm willing to share the ownership of my company with people. And so you go and they create this security is what it's called. It's just a way to describe it. And you actually are buying a piece of the company. You are truly a part owner. Most people who are part owners of companies, they also get a chance to vote on issues. So that share in that stock, that's the unit of ownership that you can buy in a company that is public. So when people say we tend to talk about the differences. A lot of people talk about buying and selling shares, buying and selling stock. One of the mindsets that I have is that we're actually buying or selling a piece of a company. And so really trying to make that connection between what you own and what you're hoping to accomplish, I think is really important. And it also helps you to deal with the volatility.
Yes. And so how can someone invest in a stock? How can they buy Apple, a Nike, Amazon, PayPal? I've been watching it, and it's making me hungry because I really think they're on to something great. Overall, they are going to become a freaking massive bank, which is what they really are now. But like, it's going to be way more formulated. But how can people buy stocks of a company?
Yeah, and things have changed so much since my first Jiffy Lube example, where I bought a $50 stock and paid $50 in commission. It was too stupid to realize the thing had to double just for me to break even when I paid the commissions in and out. But learned that lesson. But today there's lots of places you can go to. There's a app called Stash. Stash, which is really good for beginning investors. You can go to Cash App, which you can now buy stocks off of Cash App. There's a Black-owned company called Dough, like the money, like the bread, dough.com, which is a place you go. But you have to go to one of these sites and open up an account. And all the ones that I mentioned don't require any minimums to open an account or require any of you to trade at any frequency. What you do when you want to buy a stock, for all of these, you open up the account for free. You have to put money into that account, and then you buy and sell out of that account. So that's the way that you go about it. And I just named a few. There are a lot of them. You've all heard of Robinhood. I didn't mention them mainly because I do think that it can be a little easy to get caught up in the short-term game on Robinhood, and so I didn't mention them immediately. But that's also a place where you can go.
Tamisha had the question. She would like to know, how do you research companies before you buy stocks? Where do you go?
So it's so funny. I go to the Motley Fool when I get free access to this subscription stuff, and so I'm all in that, all the time. But when as you're a beginner and you're starting, the first thing you can do, oddly enough, is you can Google it. Say, is this a public company? Is blank a public company? Or ask Siri, she'll tell you. And so you find the companies, and then from those companies, I think a very good kind of starting place. Again, beyond, I'm not going to keep mentioning the Motley Fool every time. You can go to Yahoo Finance. It's a simple site, and what's interesting about them and what's helpful is you go in there. Every stock has what they call a ticker symbol, like anywhere between 1 to 4 letters. That is an abbreviation for them, and you go to Yahoo Finance, you type in the name of the company or the ticker, and you see a whole bunch of articles about them. And you can start to research the companies to see what there is you like about them. Any company that's public, on their website, they have a little tab that will say investor relations. And that's where they keep a lot of information about the company itself. So it's almost a 2-step process. You can go to some sources like the investor relations sites to find basic information about companies and whether you like them or not, but to learn what are the best metrics to look at and think about for a company. Usually there are places like the Motley Fool and others that will help you with that.
All right. Dre wants to know, how much money should a beginner spend on a stock? What?
That is interesting question, and I'll kind of repeat. This is not a financial program. I'm not a financial advisor, so I can't tell you what you should do in your particular situation because I don't know, obviously. But generally speaking, I think investing, think about it as another way of saving for the long run, and so think about if there's money that you're saving that you don't need for a few years, you can decide. But what I will say is that if you go back to what we said before, the most important thing to do is to get started. I would much rather people take $20 and buy $20 worth of Amazon than wait 5 years so that they can put $500 into something. Right. So whatever that you feel like you can afford, there are risks associated with it. Not, I think the more stocks you own, the less likely this is. But, if you just buy a single stock, there's a chance that you could, lose money on that. But yeah, don't let the dollar amount get in your way is what I would say. Think about it as how you want to allocate some of your savings that you're willing to let grow for a long time. Whatever dollar amount that is fine. I started out saving very small. It may have been like $100 a month that I just went into my brokerage account, and then it would accumulate, and then I'd buy a stock, and then I went like that over and over and over again. And then the thing that I did is, and I still do this today, every time I get a raise, a little bit goes to me, a little bit goes to stock account, broker account, and so both of the contributions have grown over time as well. So just make it a regular part of how I spend my money, and it comes out before I even see it in the paycheck.
Brooklyn has a good question. All of these questions are, I'm good. I don't want nobody to be like, why did you say mine was good? Everybody's question was like, good. Thank you so much. Brooklyn question is, how can you avoid pitfalls for like bad companies, right? How, since they are just starting out, how can they avoid that?
So this is definitely my personal point. If you're starting out, you're anxious, you're nervous, I would say if you want to avoid kind of the big disasters, there's a couple things that you can do. One, think about the things that you use, that you like, and that you see are growing. We talked about Apple. Apple's not. So the question I tend to ask is like that baseline question: do I see a scenario where this company is going anywhere? In the near term, Apple's not going anywhere. I'm not saying they're going to be the best stock ever. They're not going anywhere in the near term. As I order at 10 o'clock on Amazon and I get my package at 3 o'clock before I can even get out of the house to get it myself, I'm thinking they're going to be around a little bit, And so that first screen of when you're dealing in your daily life with companies and you see that they're providing that great service, that's a good way. And when you start, don't do what I did. Where you got Nike right in front of your face and you go searching for some small, tiny company, right? When you start out, start with the more established companies. Yeah.
And I would say this, right?
Mm-hmm.
You don't have to start out buying individual stocks, right? You don't.
Mm-hmm.
You can start out buying a ETF. The reason why I'm going to say an ETF over a mutual fund, you don't need like $2,000 to basically open it up like many mutual funds. You just need to be able to afford the share, right?
Mm-hmm. Mm-hmm.
So like if that share is $15, that's
Mm-hmm.
all you need to basically start. $15. If it's $25, that's what you will need. If it's $150 a share, you will need $150 to basically start.
Mm-hmm.
So what is it? ETFs are simply amazing. Is an ETF like what is it? Acorn stocks. That's what somebody just said. And in the short, yes, it is similar, but it is not the same. It is, but it is different, right?
Yeah.
Because like an ETF, you get to see everything they are doing. Acorn, you don't really see every single investment they are like making for you, unless I am wrong, because like I used to invest in that. And so ETFs, it's more transparent.
Right.
Acorn, you have to search a little bit deeper, and so that's why I'm for like a ETF. Acorn is also another easy way for you to like I'm basically start,
Yeah.
right? Mutual funds, I love them. Another easy way to start.
Mm-hmm.
But before we even talk about that, let me just say this one caveat. You want to start with a IRA, right? The reason why, you want to protect your investment from taxes. So what is it? Basically, you want to start with a individual retirement account, which is like a tax shelter, especially if you do a Roth. I am not a certified investor. This is just information that I am sharing, right? Do your own research. Traditional IRAs, you get the tax benefits now, right? The Roth, you get the tax benefit later. So that's why I like it, because I feel it. In the future, we're going to have a higher tax code, much, much higher than today, because we have to pay for this we have to pay for this world being at a 0% interest, right? We're going to pay for that eventually. We're going to have to pay for the construction. We're going to have to pay for the stimulus bill. We're going to have to pay for Medicare. And where are we going to pay them for that? Taxes. But I'm talking all over. Focus, Ruby. Focus. When you start investing, open up a IRA, whether or not it's a traditional or whether or not it is a Roth. If you wanted to know way more about this, go to Financial Joy School, look at our resources. We do talk about that. As for books, for basically investing, the best one is the Intelligent Investor by, Graham. It is a difficult read. Yes, very difficult. But if you can swallow on that and just like take away what you can, you're going to be a smart investor. I have a whole list of books you can use to help you. You can find it on Financial Joy in School because it's free, right? Why not use it? Go there, resources, check it out. It can give you a list of books, and I'm going to send it to you if you are signed up for Financial Joy in School. I'll send you a whole list of books. Tamisha wants to know, right? She's already investing, but like she wants to know about how can she find Black public traded companies. Is there a site she can like go onto to specifically find Black public traded companies?
No, I do not know if there is a site, and if I recall long enough, a couple will come to my head, but that is something that's going to be really hard to do. I don't think for publicly traded companies, there are an awful lot of them. There are a lot of companies that have people of color as their CEOs, and that may be something that probably expands the horizons a little bit, but I don't know of any resource where you can just get that.
You can do a Google. You can do a Google search. Mm-hmm. Type in Black public traded companies. They will give you a list.
Yeah, or Black owned.
Black owned, yeah.
So you don't get Black and Decker.
But you're right. Which is not a bad company, but I don't see them making it in the 15 years.
No, I just don't think they're Black owned. I don't know them well enough to say that. But what I would say, Ruby, to yours, I'd say I have an IRA, I have a regular account, I have ETFs, and again, for everyone, when you're starting out, when you're starting small, what Ruby is saying is correct. If you get that IRA and you get one that allows you to trade stocks, that's a very good tax strategy. Taxes only come into play if you're making money. Let's make money. So if you're not ready for that and that sounds too complicated, and you know what, I just want to do a mutual fund because that feels safe, just start. Just start. We can fix everything going forward. Nothing that you're going to do when you're starting out can't be undone. The only thing that can't be undone is the time you waste not starting.
Yes, Natalie, are you ready to give out another Motley Fool?
I am.
Let's go.
All right.
And is it going to be another relative of Ruby's this time?
I hope not.
Because we could have just talked, Ruby, and we may have to go through this.
Exactly. So let's go ahead and we'll hit the wheel.
Natalie's working hard to have Ruby show up on the wheel.
Thank you, Natalie. She's my best friend.
Well.
No. We can do that again.
Who's Bria?
Bria is another one of my. Do you see all of these names? Bria is another one of my nieces.
Oh my goodness gracious! Are they computer programmers or something? Have they hacked the system?
They probably did. Bria, I'm sorry, but I'm sorry.
See, they're gonna be successful. They're gonna be successful.
Well, congratulations to Bria and
Laquita. All right.
Awesome.
All right. So we got Laquita.
That is cool. Right. That is cool.
So here we go. We are gonna do. If you have any questions, please let us know. And some of my favorite places to basically invest is, it used to be Vanguard, but Fidelity came out of nowhere and is giving them a run for their money. And so Fidelity is a really great place to look at, to basically purchase mutual funds, ETFs as well as individual stocks. But if you want something simple, go with Stash, go with Doe, go with like Acorns. Those are the way. Schwab is not bad. I do agree. It's not bad, but like Fidelity and like Vanguard is better, right? That's just my personal opinion. But like, and not just personal, they would either charge the cheapest fees. So that's why they are better. And like their, what is it, returns are simply amazing. Mm-hmm. And so those two reasons are like why I love Fidelity and Vanguard. And so
yeah, you buy one of Vanguard's products, and I think it may even be less this now. You invest $100, they're going to charge you 3 cents a year. It's like it's almost nothing. And so you're right. It's you may not get the flexibility to buy the stocks that you want, but if you're looking for the ETFs, you're looking for the funds. Vanguard, Fidelity, both of those they're really great companies that can help you and won't charge you a lot at all.
Yes, and like, why are we doing this, right? Why is like Ollen, who is a very busy man, doing this? He runs $150 million venture fund. So like, if you have a startup that's in the tech world, you may want to look out for the Motley Fool Ventures. They do like those early startups. But anyway, right? That's Ollen, right? He's a super busy, right? And he is giving us his time so that we can close the racial wealth gap by building generational wealth through long-term investing. And we basically begin that process by basically learning how to invest, learning about a stock, learning about a share. Once we begin to like learn the words, we will feel way more confident to basically begin that process. And yes, some of this stuff is really boring. I'm the first to say that. But who cares? We want to build our wealth so that we can help our community grow for the long term. Ollen loves to say this. He loves to say that the stock market is the most democratized investment you can make. He will say that a lot. So like, I want you to just explain what you mean by that.
Yeah, when you talk about long-term generational wealth, Ruby, and how do we get started and how do we get in it, there's lots of things that are out there for you. There's real estate that you can do. There's starting businesses, other things. But when you talk about investing in a stock, you can go to Stash and have an account open in minutes. And, you put your money in and you're trading. You buy, there's no redlining like there is in housing and in real estate. You don't have to get anyone's permission to buy Apple or sell Apple. You do what you want, when you want, as much as you want. And they're really, over the years, all the barriers to the entry to the stock market are gone. And so a lot of things that we had to overcome in the past that just aren't there. And you're right, Ruby, it can be boring, but the beautiful thing is, remember before, where this is one of those things where being lazy can help you. If it's boring, just ignore it. Buy your stock. Think about that company that you think is going to be around for a long time. I talk to a lot of kids. Hey, the kids love Disney. They love Marvel, which Disney owns. They love ESPN, which Disney owns. Disney's not going anywhere. They're going to, buy some Disney, and you don't have to look at it every day. You don't have to look at it every year. I mean, I look at my stocks, but just because I like to look at it, but I only buy and sell a few times a year. It's just not something that I have to do every day, and you do just fine. And you hear people talking about having money work for you. Investing in stocks is one of the easiest, cleanest ways to do that. No one's calling you up in the middle of the night telling you their water heater broke and you own this building, so you got to come fix it. Nobody's gonna call you and tell you your stock is broke. And it does
Yes.
what it does.
We have an old house. It was built in 1923. It's going to be 100 years old. And can I just say that it has been hurting our pockets because there are so many things that we need to fix. And so, yes, real estate, you need the money to freaking maintain it. And so that everybody's talking about get in the real estate game only if you have the money to maintain it and pay for taxes. Stocks, you don't have to maintain it. You don't have to pay for taxes unless you sell it, right? That's the only time you're going to have to start to pay the government. That's why you want it to stay in there. So you don't even got to worry about that. We do have a hand raised.
We do. And so I know the time is kind of coming to an end, and I know there's some nuggets that Ollen is going to share with us before we leave out, but Brooklyn has her hand raised. I don't know if your question was already asked, Brooklyn, or if you have one, but you can unmute yourself and ask your question.
Yes, and I apologize. I don't really know much about this. I'll let you know that right now. But you're talking a lot about generational wealth, and I agree with that. But how do you actually see the benefit? In 20 years, say I bought a stock today, in 20 years, what's going to happen? How will I actually see the wealth? Could you explain that part of it?
Sure. And so you buy those stocks and it's something that you own, and at some point you sell. And I think it's a great question because you want to build that generational wealth, but you're also trying to create financial freedom. I sold a little bit of stock to buy my first home, and so when the time comes, it grows. You do sell a little bit, and you pay your taxes to the man, and you do what you do, but you keep moving on, and that's what completes the cycle. And that's a lot of people. What will happen is, I say, they'll buy a stock, it'll go up a little bit, 20%, 50%, and they get really excited and they know it's volatile, and they say, look, I'm going to sell now before it goes down because I don't want to lose this, as opposed to just saying I'm in this for the long run, and that can go up. Instead of counting your gains by percentages, you start to talk about multiples. When I talk about Nike in 20 years going up 100x, that's 10,000%. At this point, there's nothing that's going to happen in Nike that's going to make you lose that $1.50 per share, which is effectively what you bought it at the time. It's at $150 a share now, right? So, and then things come up and you just sell some of it.
So watch this, Brooklyn. If you would have brought a Coke when they first came on the market, right? Sorry, Ollen, for cutting you off.
No, I was done.
But right now, it would be over $15 million for that one share of Coke. So that's building generational wealth, right? Do you know what I can
the drink or the drug?
Huh?
The drink or the drug?
Well, I'll talk about that offline. But talking about the drink, the Coca-Cola.
You'd be to the moon in the other one too.
And so that one share would have you become a multi-millionaire. So basically investing over time in the right companies can pay off. Ollen just said Nike, if you would have brought one share, $1.50, it's $150 today. If you would have brought 100 shares, right? 100 times $150, that is generational wealth. You'll be able to buy yourself a house, get yourself, pay off student loans. There are a lot of benefits for investing, right?
So selling the share is how you get that benefit. Okay.
Mm-hmm.
Thank you.
Yes. And before we go, give away our last couple of prizes, which is going to be a CFA. We're going to have a certified financial advisor help you for 3 months to get you on the road to build generational wealth. And then We gave out 3 Motley Fools. We're going to give out 1 more. And because the next one is going to be for our next seminar, right?
Sure.
And
you
so
say have 2 for the next one.
this is why you're my uncle. Thank you. And so we are going to give out the CFA, and guess what? We are going to give out the Motley Fool, and we are going to give out a deck of legacy card game, which is a fun game to learn how to build generational wealth. So before we get there, Natalie is going to do a quick poll. All you got to do is do a thumbs up, a thumbs down, and then we will have like Ollen give us 3 tips for the beginners, and then we'll do the prizes. All right, Natalie, are you ready for the polls?
Okay.
You didn't get that text?
No.
So we're gonna do a quick poll, right? Did you get anything from this seminar/chat? Yes or no? Right? And will you be coming to the next one? That's the only 2 things we need for the polls. And Natalie will let you know what you need to do now that she's aware.
So I see a lot of thumbs up here of people who have benefited greatly from this afternoon's session.
Great. Just send me I'll do a survey later. We won't even do the poll. Ollen, can you give us 3 tips, 3 things that like people can take away to help them on their investment journey?
And we've talked about these, but I think these are the most important ones to think about if you take away from here. 1, get started. You can open up an account without funding any money. So it can seem intimidating, can be big, but let's make that first step. Just whether it's like a stash, whether it's dough, whether it's the other ones that you mentioned, find one that looks good for you. It's not hard to do, and open up an account, right? And the next and most important thing, and this is all before you have it. The next thing you should do is, and I wrote it down. When you go into this, please don't go in thinking that you're going to make $1 million in a week. It's just not going to happen. And then the last one I would say is find a community to go through this with you. It's so much more fun doing it with people, whether that's the Financial Joy School, which obviously you're going to have a lot of fun with Ruby. You can't not have fun with her, but whether maybe it's a friend, you and your friend, you go to it, maybe it's a Motley Fool, you go there, but find that community so that you can do this together, because it's going to be so much more fun and so much more rewarding, and you'll learn so much faster that way. So get started, think long term, find your peeps.
Thank you so much. I want to thank Ollen Douglass. I want to thank Natalie Mead. I want to thank you all for coming and like helping us build generational wealth for the Black community, which we are all in. And the wonderful Trust&Will, our sponsor, who have made this event free. Check them out. They are a great company. Check out Motley Fool. They are a great company. Check out Financial Joy School. We are a great company. So, Natalie, let's go do that will. And this one is going to be for the financial advisor. You will have 3 months with a certified financial advisor. Let's see who the winner is. Reginald. All right, Reginald. You are going to contact everybody later. Reginald, send me an email at info@financialjoyschool.com. All of the winners, please send me an email at info@financialjoyschool.com. If you did not win, come on, let's be honest. Please don't send me an email. But like, if you did win, please send me an email. You have won the CFO. Now let's see who will be winning the Motley Fool membership. Let's go, Natalie. Let's see who will be winning. Rochelle is the winner. Email me and we will get that out to you. Now, let's see who will be winning the legacy card game. This is the last one. Thanks. This is the last one. Who will be winning the legacy card game? You ready, Natalie?
I just wanted to customize it a little bit.
I appreciate it. I appreciate it. Darlene won. Darlene, email me info@financialjoyschool.com. Thank you all for like spending your Saturday with us. If you have any questions about investing, please contact me. I would love to help you on your journey by like pointing you in the right direction. And we are building community right here with Financial Joy School. So thank you all. Thank you, Ollen. Again, I greatly appreciate you. Thank you, Natalie, and everyone. Have an amazing Saturday because you can. You deserve joy and wealth. I deserve joy and wealth. We all deserve joy and wealth, baby. Let's go until the next one. Next month, we are going to be talking about how do we invest. Now that you learned what it is, let's really dig into how do we do it. Have an amazing one. Peace and blessings.
Thanks. Bye-bye.